Hi there, traders. Many of you know how to use the CASHBACK trading terminal, but not everyone understands how it's important to use the combination of integrated elements for profitable trading. Today we will talk about the graph in the terminal and how to use it to your advantage and not to waste your time switching to external apps to monitor charts. Subscribe for our Telegram channel where we post free signals to work out, useful articles, educational videos, and more. If you want to become a professional trader, visit our website and figure out how to join our community where our students master their trading through consistent practical lessons and trading diary check with the feedback. When you join the community, you go through the video course. This video course represents theoretical base. Then you pass a test to check your theoretical knowledge, with further limitless practical lessons in Discord server held every week. It's impossible to make your trading profitable alone. Join the team of professionals where you will level up your skills with no limits in time. Now I want to draw your attention to the integrated element of the CASHBACK, namely the chart. I'm sure thanks to other videos you already know what is docking, and you can manage your working space, for example, placing the graph here as you wish. So when we're talking about the chart, it of course contains all the necessary elements. And in scalping here, we do not need any indicators because when scalping, the indicators will create too much noise and false signals. Instead of this, I appeal you to take a look to several factors. First of all, as scalpers, we should trade only active in-play instruments. CASHBACK graph will help you with that. Just look at the vertical volume. This tool works only when we compare two areas of the graph, and we should find the zone with the contrast in volume increase. It means that the huge capitals enter the instrument, making it active. What I mean? Here you see the area with the relatively low volume, where the volume is moderate, and then we see the contrast of this volume, and the average volume increases. The average level of volume instantly increases. This makes the whole instrument extremely active. So in turn, it makes the instrument very interesting for us as scalpers. So we can search some formations according to your strategy, for example, breakout or pullback on this strategy. In this case, on this active instrument, I am expecting the pullback from this order block, something like this. Next, we evaluate the extent of manipulations. If the graph is clear, it's okay. I will show you the example of clear graph like this, as you see. The price movement is mostly created on the basis of candles bodies, not shadows. But here we see some uncertainty because the shadows are getting longer and longer. Or another example of manipulated instruments with very long shadows, as you see. And I call this a fish skeleton, when we have a lot of shadows inside very narrow range of the graph. Usually it tells us that there is a manipulator, spoofer, or robot that in fact could spoil your trading. Even taking into account that the instrument is very active. Too many shadows in a narrow range is a dangerous thing that tells us that there is a high risk to have a stop loss hit before your trade reach a target. We skip such areas. Another example of the area with the manipulator or robot, you see the narrow space, narrow range with very thin price movement with the shadows and so on. Finally, we can measure the volatility to understand whether it will be reasonable to trade this instrument or not. We can measure a nether, a parameter of volatility, just by using a ruler. Right mouse button, measure, and we just measure the average 1 minute candle. The ideal volatility for your trading is when an average 1 minute candle corresponds to 1
to 1.5% of movement. Here we see that the volatility is decreasing, and as well you see that the volume, vertical volume, decreases. We measure average candle 0.3, 0.6, so it means that we have very low volatility, and the trading on this instrument doesn't worth it. And let's check another example. Here we see very active instrument on pumps with very high volumes, as you see, and an average candle will correspond to 1.5% of movement. That's really good. As you see, each candle is more than 1% of movement. It will give you a really good profit in a very short period of time. If you are a scalper, you should trade such active instruments. But don't forget about the risk management and your trading strategy rules. The less you use external apps, the more time you save. That is very crucial when scalping. Even more, combining order book reading with integrated graph analysis, you have a strong advantage in comparison to those traders who trade only graph and do it through web terminal. If you have questions or topics for next videos, please write in the comments below. See you soon.